Small caps spring to life. Here's what you need to know before the bell. We've talked about this market this year being very narrow breadth. In fact, if you didn't own the top 10 stocks of the market this year, you really haven't participated with the markets and certainly haven't outperformed it. If you've owned anything else, pretty much small caps, mid caps, emerging markets, well, you're underperforming this year because those have really not done anything of consequence. In fact, really since the beginning of this year, small caps have done absolutely nothing. This is a chart of IWM, which is the Russell 2000 index. And we are basically just, as of last week, at the same level that we started the year at. So no performance really whatsoever. That's what you would kind of expect with a slowing economic environment, is that those are most impactful, right? The slowing of earnings, the impact to earnings growth, etc., impacts small to mid-cap companies the most. They are also the companies that don't have the ability to do big stock buybacks, to buoy stock prices, and really they're not the ones infected by the AI chase at the moment. But nonetheless, we've been talking about the risk of a rotation in the markets here over the last few weeks. The markets have been really bifurcated between technology, communications, discretionary versus pretty much everything else in the market, and that eventually we would see a rotation. Eventually the markets would go, hey, these stocks are really overbought. There's some undervalued stuff over here. I'm going to go buy it. And that could be a very short-term rotation that we would see in the market caused by short covering, etc. That's exactly what we saw over the last couple of days. Small caps all of a sudden have sprung to life. A big chunk of that has been short covering in those stocks in particular. Now, the important thing is this likely isn't going to last for long. Small caps are already above 3 standard deviations, above their 50-day moving average. Again, as we've talked about before, that's a very stretched position for that index, and you're likely going to see this either kind of stall here, start to consolidate, or pull back. If we look back here over the last couple of years, we see that every time the market has been this extended above the moving average, that has pretty much been a peak in the index, at least for a short term, and leads to a short-term correction or more within that index. So if you've been long small to mid-cap stocks, this rally may last here for another week or so, but use it as an opportunity to rebalance risk and reduce exposure to those areas. This is something that we've been talking about since the beginning of this year. Remain underweight small cap, mid cap, international, emerging markets, because emerging markets, small cap, mid cap in particular, are most affected by an economic slowdown. If we're going to have a recession or even just a slower economic environment later this year or into 2024, that is going to impact earnings of these companies the most because they have the least ability to weather a slowdown in consumption by consumers and will weigh on their stock prices. So again, use this as an opportunity to reduce some risk here. But again, starting to see a little bit of that rotation that we've been talking about recently from tech and discretionary into some of these other sectors. That'll be a good opportunity to rebalance your portfolios between the cyclical and defensive sectors of the markets. I'm your host, Lance Roberts, and that's what you need to know before the bell.